Good morning, guys. Let's make this nice and quick. So, March 24th, market limit up this morning, guys. So, futures go up 5% and they go limit up. That halts any more upside action. And as a result of the market going up, most names are going to gap up this morning as a result. However, personally, I wouldn't get excited about this bounce because we're still stuck in the range, and I'll show you guys what I'm talking about. But to me, this is just noise unless we break out. And I'll show you guys in a second, but key levels for the ES today: to the upside, 2400 and 2386. To the downside, looking at 2175-ish today, guys. So before I talk about my game plan, let's look at the market itself. Right, and you can see you make this big pop after hours, we go limit up, and now we're fading a little bit. But here's why I'm not getting excited about this bounce, guys, and why I would rather short this bounce. We're still stuck in the same range here, right? We're still stuck here as of this week under this 2380-ish, more importantly, that 2400 level. Just like yesterday's bounce pre-market, I kind of look at this as nothing but noise unless we just found a bottom. It doesn't necessarily mean, guys, that we're going to rip right back towards the upside. The market can find a bottom in a few different ways, and one way is that potentially we just kind of bang back and forth for a few days and sometimes even a few weeks. So keep that in mind. But with this whole big move here this morning, I'm not really looking at it, guys, as too big of a deal. So again, that's why I gave you those key levels of 2385-ish, clear resistance from yesterday morning, as well as that 2400. I'm looking at, guys, at any move underneath that, and really any move above the lows right here, as a bunch of noise. Now, you can take trades, right, when the market is stuck in a consolidation, if, guys, you can try to play, at one of the extremes. If you start buying calls or puts kind of in the middle of no man's land right here, premiums are pretty tough right now. So keep these things in mind as we head into today's session. This nice looking bounce here this morning, to me, guys, it's just a bunch of bullshit unless we actually start breaking out. So we'll see what the session brings here. But what I'm hoping is that this bounce can last at least into the open. And here's why, guys. As far as what I'm looking for today, assuming we don't go red by the open, assuming we don't roll over, if we can hold this here, if we can hold this 4 or 5% pop, call premiums are going to spike at the open, even the way out the money calls. In a few of my better trades as of late, guys, I'm selling call spreads way out the money. Right? Mid-April, early May, one of my spreads, right, I'm selling the 3,000 strikes. So that's what I'll be looking for today if this pop can hold. I'll probably shoot for the May 1st expiration. That's where there's some big fat premium, and maybe I can go 2,900, 3,000. I'll go as far as I can, getting a risk reward that I like. So I'm hoping this will hold up here this morning. And I'll give you guys a look at the premiums now. Alrighty, so peep this, guys. I'm looking at May 8th expiration. That gives you about 45 days. And now, mind you, once the market opens up this morning, obviously these premiums are going to change. But just for conversation's sake, right, this is kind of what I'm looking for. If we can actually get a good pop here this morning, you're going to see a spike in premiums, guys. And I know a lot of you are shorter-term traders, so you're used to seeing the premium spike on the weeklies. But in an environment like this, where this pop is a 4 or 5% pop, you're getting the IV spike across the board. Even these 40, 45 day till expiration options, they're getting pretty thick, guys. So this is what I'm going to look for this morning. If I can come out 2,900, 2,950, 2,960, I'll look to sell a call spread, with 40, 45 days to expiration. And like I said, premiums are going to change at the open. Right now, this risk reward isn't accurate. However, guys, I'm looking at this from a high probability as well as a cushion standpoint. So let's just say theoretically the market rallies 70 points today and we end up hitting 2,300 on the SPX. If we're at 2,300, guys, say I could get a spread at 2,960. And we'll have to see how the premiums are. But to give you an example here, that's about 28% cushion. So let's just go, say, a little bit more modest. We get the 2,940s. Even that is still a 28% cushion. So when we think of it like this, right? We're in a huge market right now of a lot of uncertainties. We don't know how bad, the virus is going to get moving forward. We don't really truly have a grasp on, the implications and the damage this could cause moving forward. So as far as trying to call a bottom, guys, it's a tough game right now. However, because of the volatility, the market is making such big moves. And again, when something bounces like this morning, we're seeing 4 or 5% bounces. It's kind of the new norm. So to be looking to play puts overnight, while it does offer a good reward, of course, if it works, it's a bit risky. So my preference, guys, is to just sell the shit out of those deep the money calls. So let's say today we do hit 2300 here for the SPX, and I'm able to come in and sell a call spread. Let's just call it 29.50, right? And we'll have to see how the premiums are. But guys, I'm basically going short the market in a fashion where, as long as this thing doesn't bottom out and just rip, as we saw, 28-30% to the upside in the next 40-45 days, I'm walking away with my max profit. And to put that into perspective, right, the last time that we bottomed out, roughly around these same levels back, obviously, in December of 18, it took the market, guys, it took us a good 5-6 months to reach 29.50. So I'm not thinking that move is going to happen in the next 30-40 days. But if I can go scrape some of that premium up, if there's actually thick enough premiums there to get a good call spread, I'm going to sell the crap out of it, guys. I really like that trade. So that's what I'll be looking for this morning, assuming that this gap here this morning can hold. And for those of you guys in the Focus Trades group, we will work through this potential trade together this morning. If I take it, I'll let you guys know. We'll talk through the thought process. But again, guys, this is a good looking pop, but I don't think it's anything to really focus on. Now, as far as potential day trades, before we wrap this up, this is what we're going to talk about in more detail as far as, how to read the tape for these trades, etc. in the live stream this morning. So if you're not in the group yet, definitely check that out. But here's what we're looking for, guys. We get the gap up this morning. And now with the gap, these hourly charts, they're kind of giving us clean little levels to play on here this morning. So assuming we don't completely break down or break out, over the next hour before the open, if we're still kind of stuck in these consolidations, right, where we got the pre-market low, we got the pre-market high, and they all kind of look the same. Apple, right, Nvidia over here, yeah, they all pretty much look the same, guys. Depending on which way the market goes, you could look to play those setups, guys. Either a breakout, say above the pre-market resistance, or a breakdown below the pre-market support to fill that gap. Those could offer some decent opportunities if the market can make a strong, decisive move either direction. Again, you've got to understand the implications of the chop on those options premiums. If we just kind of bang around back and forth all morning, guys, it ain't really setting us up for a good day for those directional day trades. So those are a few things we'll work through this morning in the live stream. But for those of you guys here, wish you the best of luck today. I'll do a video tonight, let you know if I did take these trades, and we will see how things go. So kick some ass today, guys.